Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, the 21st of June, 2023, 6:10 p.m. Central Time, and it's Christmas, and I'm a happy camper. It's beautiful in Chicago. We are not hot like so much of the South. We are in the evening, 60 degrees. We are at daytime, mid-80s. No humidity. It is absolutely stunning here, but dry. And that is what's driving the grain markets dramatically higher, all right? Drought, there's nothing like a drought with the tight supply. And we're starting to see some of our partners in Europe are complaining about their weather situation as well. Between the El Nino event and what's going on with the dryness, you got plenty to be watching. And watching is what you have to be doing. Now, there was also a change by the government. The Biden administration pulled another quickie on the farm states. They wanted them to invest heavily, get the biodegradables going and so on. And then they made an EPA mandate and pulled the rug out from all these people. There are people, and they should be, on fire. It is the reason soybean oil ended limit down today. Wow, meal was sharply higher, soybeans through the roof, wheat through the roof, corn, all because of a quickie. Probably done to appease somebody in the oil market, not the biodegradable. Not a smart move. All right. So when we looked at the rest of the day, we saw that Fed Chair Powell had his morning drilling. He's going to have another one of them tomorrow in front of the Senate. They'll be a little rougher on him than they were at the House of Representatives. And again, I didn't agree with his analysis. He did his very best, because he wasn't under a constraint to talk about why the pause. And his answer was this, and I quote him. We went with 75-point hikes, then we went with 50 hikes, then we went with 25s. We didn't stop anywhere. We wanted to step back and see how it's doing and give the market a little breather. Why is what I'm asking. You're already seeing the impact. Core inflation is high. It's not dropping the way you want. What are you waiting for? You're not Leonardo. You're not going to paint the Mona Lisa. Step back. What do I have going here? I'll come back in a month and see if I like it, or I'll paint over it, as he was famous for doing. Come on. You got a moving economy on you. You got everything you need. You've seen what's happened with everybody that's trying to stop. Canada, Australia, we just saw record 1992 inflation numbers, big numbers come out in the UK. Tomorrow morning's their interest rate decision. Is it 25 or 50 points? That's really what the market's got to toss around. Analysts think there'll be a total of 75 minimum given before they can hit the break like we've hit. And that is a pause. You've hit the break. So we're going to get unemployment, a few other numbers. The markets today were interesting. If you looked at the S&P, the NASDAQ, the Dow, and the Russell, you had two of the four had lost their bullish embedded readings. Two kept them, the NASDAQ and the S&P. And today was the day they either made the run and they'd pull the others up, or the others are pulling them down. It was going to be one of the two. As it turned out, everything pulled down on the other markets, and it's kaput. Now you got to rebuild. Can you get the readings back tomorrow with a strong update, a powerful update it would take? Yes, you could. I'm not saying it won't happen. But today was the day that I had clients that were long, and I told them they had to be out. The whole risk on the trade, as it turned out, $85. That's okay. Dollars, not 85 points, okay? And I'm content with that. But now you look at the dollar taking a beating, and I've been telling clients that I happen to think that you want to own some currencies against the dollar. And I'm going, shucks, we just missed a great copper play because copper first went up to a certain number last night. I had put out a detailed instruction how to buy copper today. It ended up going down to my number, but first it did something to knock me out. Have you taken my enhanced Bollinger Band course? If you have that embedded reading, which copper has, there's a way to come into it on the pullbacks, which you're supposed to do, but one caveat, and that caveat happened. Okay, there's plenty of times where that caveat saves me. Bonds and notes, what do we do with those? They're trying to figure out, do they get bullish or bearish? There's another day of testimony tomorrow. Be careful with it. So when we look at the S&P for the whole break that you're getting, and it sounds and feels like a big break, it's not. You're down 0.93% for the week. If you and I just step back, and that we should here, the week before, you were up 3.45%. The week before that, you were up 0.39%. Before that, 1.7. These are all gains. So what we've had here, and that's the point that I'm making, you had a steamroller, a mania buying. That's what I called it. The market had taken off, and it was reaching for the sky, and now it's in the thralls of the whipsaw, the corrections. Probably has more to do with the two-day event by Fed Chair Powell than it does the market itself. But now you've got the pullback. I think you see that. If you take a look at the daily bar chart, you're pulling this back. You've got a pattern of a lower low, a higher high. This was a vertical price rise where every day you were making a new high. I felt like an amateur. One of you wrote me, and you're right. Ira, you didn't catch this move. I did not. Okay? Don't catch them all. If I did, I'd walk on water. Remember Joe Granville? He did it at his thing where he did the on-balance volume. If you don't know that indicator, learn it. It's a great indicator. I happen to be very fortunate. I knew Joe on a first-name basis because he was on my TV shows a bunch of times. Character, everybody gets one time they're right, but he was a showman and he knew how to do it. A fabulous man, fabulous man. Market came up, corrected a bit, pulls back a little bit here. Okay, now I'm looking at what's happening. Where might it go? That's how you look at it. Go defensive. Okay. If the market wants to keep falling, the support's going to be in the neighborhood, the 43.55 area, 43.60s. Remember, this number is going to climb each day, and if prices continue to break, maybe they can come together there. But there's nothing on this chart that is bearish. This is a move that is correcting a vertical price swing. When it gets a bounce, you're eventually going to get higher lows, higher highs, and the question is, can you buy it? And you can't. Remember what I started off with. If you lose the embedded reading, unless you get it back tomorrow, and I want to show you, here you are with the market. This is Tuesday. Still had the reading. This is today. On the close, you got a reading under 79. That's it. As far as I'm concerned, you got to be out of this, and you're now doing this. You got your thumb. If you bought the correction, I would have recommended buying it. I did. I told my clients to do it. Now you got to come out. So the market was down 25 points. They bought it right. But they gave back some of that. Okay, like I said, I looked at it because I'd done tonight's update for them. $85 loss on the contract because I'm trading the micro minis. And now I go into where you're at now, and we'll do this together right here, and you can see the market's even losing it by more. That doesn't mean it can't come back and re-embed tomorrow, Thursday. It can do it. It's got to do an awful lot of work to do that. If it stays like this, the odds, and that's what you're working with on charting, before you get up here, price and the 18-day average should come together. And that's where I start licking my chops. That might be the spot if I get the right formations to go with. I told you that the S&P and the NASDAQ lost today their readings. Same thing. Price and the 18-day average likely to make a run at each other. What had lost it already, take a look. This is one more day. I thought it had 79, 78. It didn't. It's in the same shoe. I don't know why I thought it did. It hadn't. Today was the day it lost it. So where do you think I think it's going to go? In unison, before the market gets up and over that number, I think the market and the 18-day average should make a better run at each other. When we look at the Russell, this must be the one that had lost it a little bit earlier. I'm hoping. I'm doing this from memory. Okay, 79.05 on Tuesday. That's like 79, so you're on the cusp. Unless you have a big update today, you're going to lose it and make a run. And where do you think I think you're going to run to? So we'll see. Could I be wrong and you don't get down there and you get up over those highs? I could be. But the odds are in my favor, big time, that that's where you go. And like a pinball game that went tilt. You push the buttons on the side, you hit that and everything lights up, and now you're looking for a new trend. What's the next move going to be? In the bond and note, you're trying to get up and over these highs to see if you can get a rally going. That's what you're working on. Why? Higher lows, and you're trying to make now the higher highs. Now, we step back. Is it a higher high? It is. The high right here was higher than that. So now what the market's got is a pattern of higher lows, higher highs. It is in sideways action. I consider that Bollinger Band very narrow, very sideways, looking for big resistance at the Bollinger top and the 100-week average, but it's bullish. And until the market gets back under this low, I think on breaks into the 127.18 area, the pros are buying the market. Not so in the 5-year note. And I don't think this gets that kind of play. I think what happens is the short-term money, the Fed, you have to realize that's where the Fed's got its power. The back end of the money is going to be a whole different world. A lot of people you're going to hear, they're going to start saying you want to buy a lot of bonds that aren't quite junk status, that have put in these numbers, these big yields, because what's going to happen is the yields come down, the bond will appreciate over time. Remember, they flip-flop with each other. In the dollar index, look, you've got lower highs, lower lows. You're probably going right here. Are we embedded? Both numbers were under 20 today. Day before under 20 and the day before under 20, not the day before. Today was the embedded day. So I am looking to tell my clients on a certain set of circumstances, let's look to be sellers on rallies. Take the embedded course, and you know the circumstance. It's not a secret. It is to you if you haven't taken the course. In the euro, I don't know why I didn't move this arrow over here. You have higher lows, higher highs. Now, the Bank of England is tomorrow with their rate decision. The eurocurrency is not the Bank of England, but everything gets impacted the same way over there. I think it's a lockup for the bank to go with a rate hike. The question is it 50 or 25 points? If I'm on that board, I want to go 50. I mean, you got to take a knife to the throat of inflation. The problem is you're going to crush the economy. The problem is they keep paying people and trying to soften the blow of energy. The problem is they keep settling these strikes, and God knows these numbers. Where's all the money coming from? They have a mess on their hands. Here is the pound. You've got the embedded reading. Would I ever tell a client to go number one into a major report? Never. As much as I think the bank is going to go up on rates, would I tell you to go into it? Look at my eyes. No. I got killed putting out a recommendation 6 years ago, something like that. The night before the Swiss National Bank came out, we will not be doing this in the market. Head banker. I had a sale, another report, same one. What were they going to do? I swear to you, he flipped. I had the money in the market, obviously, or my clients did, either way, and a good-sized loss. I learned a lesson. I don't trust these bankers, period. You trust them. I'll play after the fact. That's firsthand, and it happened to me. So I know. I watched, I did everything, and I couldn't believe it. Thank God I have a voice on TV, and I was loud, okay? At that point, I was still on CNBC and Fox every now and then, and I was bitching up a storm. Higher lows, higher highs. As you can see in the marketplace, you're still embedded. I still want to be a buyer in this currency, but after the fact. Might be at my 11:30 update. I want to see what it does. Remember, playing those is not like playing the U.S. When the Fed comes out and does something, we get the yin-yang impact. We are the biggest economy in the world. The U.K. is not. And what happens is we do something, Asia's sleeping, they wake up, they react, Europe does it, and I call it the yin-yang. And you'll see more times than not, my gosh, if you're a little patient, the market will come to you, because what the first reaction here isn't necessarily what the reaction is going to be. It goes around the world, comes back, and by the time you wake up, you go, oh, look at that. Bitcoin. What happened? I guess this is Citadel and BlackRock getting together with a surprise announcement. Basically, they opened an exchange, I guess. Why, I don't know, but they did, and the market just exploded because these are big names. This is not Binance, Coinbase. These are names around the world that have a lot of meaning, and that came out of left field. We then get to Brent versus WTI. Look at how you're pulling back. You don't think you're going to make a run for that 18-day average of 448? We've been talking about it a couple of nights. You are. And I still don't know what to do with the energies. And here's one of the things. As we've come up and we are in an uptrend, you also, if you had an outside day course of mine, let me teach you something. You had an outside day down. We talked about this on Tuesday. Today's only Wednesday, right? I said, if you take that high out, be careful. It could be a trap, and you set the market to come up here. Today, the market takes out that high. So unless you go immediately back under this low, the odds favor this market's going to try to make a run for that high. It did the same thing in WTI. So that's where I think those markets are going. We'll see if that plays out or not. Then in the gasoline, as I said, I think the pros took their money off the table there. And now, as much as this is support, and there's a lot of support, the 100-day, the 200, the 18, it's too overbought. I mean, I like the pieces of the puzzle to at least fit in so that if I'm wrong, I have a shot at walking away like a gentleman. And if I'm right, hey, I'm the happiest guy. Tonight I'm making a full chicken, but I'd have a steak. I love to cook. Natural gas. Up here. One of you said I wasn't covering this. What don't you listen to? Number one, this is not the subscriber video, but you didn't hear me saying the first heat blast you get, you're going to take off to the upside. I mean, I do read the comments that come in and I start laughing because I don't know what these people are watching, or maybe it's later at night and they're drinking. But I said it, and I said you might get up then if you cleared the 18. Maybe you can get up into this resistance, but it's pretty stiff. It is. That heat is tremendous. Don't try fading this market, but it's also not embedded. So you pay attention to that, and away you go. And that's what we do. We write about this all day long. You know, there's a full staff at the company, Linn, that I'm with. And I've been with this company on and off 30 some odd years, okay? Does that give you an idea how far back I go? The president of the company, I was there when he was basically born. It sounds funny, but it's true. And I love these people. They're great people. They put together phenomenal people to write. Meteorologists there. They're a huge grain company. I bring in the financial sector part to it for pieces of them, and we've been working together this way a long time. Plus, we've always worked on projects together in software, and it's my charting software. Theirs. What do you think we developed together? So we look at all this, and there's just so much here for you. You're not going to get this by reading Reuters or CNBC. I get all these services. Or these others. You got to get the ag services we know. We're talking to the commercials. Then you get away from that. We're talking to people in the energy business. I mean, and the staff writes about it. They tell you what the spreads are doing, what the option plays look like, who's doing what in the market. That's the type of fundamentals you want. If you like charts, I think I'm as good as you're going to get out there for somebody to work with. So take this free trial. Go to iraepstein.com, free offers. You'll see on the top left. Move your cursor to the top. You'll be there as well. I'm Ira, Modest Ira. You have a good night, and I'll see you tomorrow.